Hello subscribers, today is May 21st, 2021 and this is a MasterChartsTrading.com market recap. As always, please don't forget to hit the like button, subscribe to this channel and share this video with others. We'll go a little bit quicker this week again and we'll cover all of these topics. Stocks are trading next to records. Ideally, junk bonds should make a new record to confirm the move higher for stocks. Possible rally in bonds may be coming right now. We'll examine dollar and gold interplay, and we'll spend a little bit more time this week examining the Bitcoin and other cryptocurrencies which seem to be collapsing. Also, I have a couple of more newsletters which are called, one is called Elite newsletter, one is called Speculator. These are both paid newsletters. You can find out more by clicking the links. I'm going to cover the stocks, these stocks in those separate newsletters. If you haven't yet signed up, sign up. So quickly again, I'm going to be using throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart as this green, blue, red and yellow lines. So what these lines are support and resistance basically. And I trade 100% off of the support resistance lines. So I use nothing else. I don't use any moving averages. I don't use volume. I don't use any of that stuff. And we're looking right now at S&P 500 futures. Again, we started buying it way back when in April of 2020, so a little bit over a year ago, so into our retirement portfolios, etc., and as well as into trading accounts. And as of right now, so what I usually do is my technique is to buy on close. So once the price closes above the blue line, for example, I'm going to zoom in the last year's price action, so you can see the finally the price closed above the blue line right there where I'm hovering on the 29th of April. So that means that the resistance has been overcome. Up till then, up till 29th of April 2020, we were in a downtrend, in a bear market. And in fact, we could have shorted it right there on 27th of March. I decided against it, based on the fact that there was just so much money that was being created out of thin air. So 29th of April 2020, the breakout occurred, and since then we're basically buying it on close above the blue line. But once it goes way out there, we don't want to be buying it down up there, right? So we were waiting for a pullback, and that pullback hasn't yet materialized, and it's been a year. So I need a deep pullback, pullback towards what I call strong support. So blue line is strong support. It hasn't yet happened. So we will be waiting patiently for when and if that happens in the near term. It could not happen in the near term. We could continue like this up and up and up indefinitely. In fact, I think we will continue for quite some time. I obviously, it's impossible to make a prediction about the future, but I think it's easily, we could easily triple. So in other words, S&P 500 would go to 12,000. I don't know when, but it could be within a couple of years, easily. The reason being, again, we're looking at, let's say, I'm going to show you Bitcoin at the very end, and Bitcoin went from 7,000 to 60,000. So I don't see why not S&P cannot do the same. Dow Jones, the same thing. So it's currently at 34,000. It can easily triple and go to like 100,000. Why not? It's not impossible. I mean, let me see. Since our alerts back in May of 2020, let me see how much the gain was. So the gain was 37%, and that's in about a year. It could double in a year and a half. It could quadruple in a year and a half. Why not? We need to be open to this kind of thing. And people say, oh, but Alex, this is crazy. And I said the same thing when we were trading Bitcoin at 7,000. We were buying it at 7,000. People saying, Alex, but you're crazy. And then it went to 60,000. So this is just something to keep in mind. Here's NASDAQ QQQ, not much difference. Again, strong support at the blue line, weak support at the green line. So you can see we're doing the same thing as we did before. We're coming down towards the green support resistance, and as we did, for example, here in October of last year, again in March of this year, and again late March of this year. And now we're doing it again. So we're touching this support resistance line. Just from looking at this chart, it's very, very, very difficult to say what will happen. However, we don't really need to know, and we don't need to anticipate any of this stuff. So we just need to look at the chart and see, okay, if we're gonna get a pullback towards the blue line, we will start buying it, but not until then. Right now, there's not much we can do. We're just gonna sit there and do nothing. Same goes for IWM, small caps. So small caps, the latest opportunity, last opportunity rather, was in September of last year. That's a 62% gain. Again, why can't it triple? So let's say it went from 20th of March right there in 2020. It went from 96 to let me see, 210. So that's 145% gain in about a year. So can it continue? Maybe you can make a comment. What do you think? I think it can easily continue. We could double from here again. So junk bonds, again, not much really happened. We're still narrowing, so you can see the narrowing of a trading range. And what I'm talking about here is, see how far the distance is? The lines were so far apart, and now they're so close together. And we can turn on the future projection. This is a new indicator I have. And if we look in the future, we can see that it gets even more narrow. So the junk bonds, we're looking at a potential trend change. So a trend change would occur if the junk bonds dropped below the yellow line right there. So it's not that far off, you see. So we need to be kind of cognizant of the fact that junk bonds could do that. Now, why am I even worried about junk bonds? So this is what is called CC, correlation coefficient. So this shows a correlation of how likely they are moving together, how together they move between S&P 500 and this particular ETF, junk bonds. So vast majority of the time, junk bonds and S&P 500 is positively correlated. So if one goes up, the other goes up as well. On very rare occasions, it's negatively correlated. For example, where I'm showing right now. This means that what I'm worried about is if the junk bonds turn around and break down into a bear market by closing below the yellow support resistance line, will it also pull the stock market with it to the downside? So this is something we need to kind of be cognizant, and this is the reason why I'm worried about the junk bonds. Here's TLT treasuries. So TLT long-dated treasuries, they correlate poorly. In fact, they are quite negatively correlated. So I'm going to show you what I mean here. So you see how the correlation coefficient spends most of its time in the negative territory, because bonds and especially these treasuries, long-dated TLT treasuries, they normally are bonds of this type are normally bought during the times of uncertainty. We had plenty of uncertainty, but it seems that the certainty is returning to the markets, and there is the breakdown on January 6th of 2021, coincidentally or not, on the date of the riot in the insurrection in the Capitol Hill. Now, what am I looking for into the future? So it seems like unless we break down, and we can easily break down and just continue lower from here, there is a good chance we might get a rally But once again, this is a bear market rally. So what does that mean? It means that the stock is going down and is going to be a counter trend. So the trend is down and we're going to get a rally. So if we're going to get a rally, we should be on the lookout to sell it short again. So something similar to what we had, for example, right there on 27th of January. If that happens, then we will sell it short again and bonds will continue lower. Most likely will continue lower. I don't see them going back into the bull market yet. All right, then moving into the dollar universe. So dollar index, here is DXY. The lows are right there where I'm hovering. 6th of January again, date of the insurrection, the low for the dollar. But it's approaching the lows again. And I thought that, this rally into 31st of March, I thought we're going to continue higher and break out towards the blue line where I'm hovering, 94.58. But it didn't happen. And looks like we're about to make a new low. So I had several short positions in gold related. For example, here is gold futures. In fact, I shorted GLD myself. I'm going to show it to GLD. Right there where I'm hovering on 8th of March. Obviously it didn't work. I had to, because I was buying puts. And if you ever traded options, you will know that options move, significantly more than the stock itself. So it seems that I was incorrect about the direction of the gold because the way dollar is acting. Let me find it there. And I thought that the dollar is turning around into an uptrend. If it was turning around into an uptrend, I would have been correct to short gold. But unfortunately, it seems that it failed. So I had to close my gold position, gold short, and in fact, I sent to my subscribers I would be exiting any gold-related short positions. So we'll see what happens now. This happens occasionally. You're not going to be 100% successful. I have about 75-80% success rate. In other words, 75 to 80% of my transactions end up positive. I also make lots of money. My profit factor is 3.1, averaged over 4 or 5 years even, and I made 100% last year. So it's just something to understand that what I'm doing here is just not pretty pictures. I'm actually making money here. So gold, I would be watching for a breakout at potentially new highs. That it's a good possibility now. Here's gold miners GDX. So alert was sent for my subscribers. I would be shortening it. Clearly, it was a failed trade again. Once again, this is a. You will know, if you're serious about trading, if you're serious about success, if you're serious about learning how to trade, then you will know that you will not have 100% success rate. 100% positive success rate. You will have failures. So this is one of those failures, and you can see that I am not really ashamed of them. I'm just showing them because people need to know how to trade, and they need to know how to deal with losing positions as well. So this is, you just have to bite the bullet and close it, because I can show many examples of when we don't close the position and then it gets even worse. So we must bite the bullet and just exit and move on with our lives. Okay, so let's move on with our lives into the Bitcoin universe. And so here's Bitcoin. We actually traded it. I'm sorry, I'm going to show you a different picture because it was already marked. So we traded Bitcoin. Again, I'm going to show you what here's the actual alert in May of last year at around 7.5 thousand. It went to as far as 64,000. So our positions were up 640%. Now we were able to exit at a huge profit, close to 400% profit. So here's that exit, and I marked it, I sent it to my subscribers, exit alert and congratulations. So there's the exit alert on 17th of May. See how precise the indicators are? You can precisely know exactly what to do at any given moment. So the system is complete. And again, you can sign up on my website, and I can show you all the stuff that's necessary. So right now we're seeing a huge collapse of Bitcoin. Already we're seeing, from the top, it's already down as much as 50%. You see 54%. And easily we could break down and go into, below 12,000 easily. So right now we're looking at very important support level, and the support level is currently at around 30,000. So if this level doesn't hold, where I'm pointing at right now, this is an important support resistance level at around 30,600. If it doesn't hold, then most likely will just collapse. So if you have potential to buy puts on Bitcoin, you could try that. Here's Ethereum, the same. Excuse me. Here's Ethereum with the exit alert and congratulations again, and that one is good for 654% gain. Let me show you where the original alert was. So original alert was right there on September 24th. I myself opened, but I closed it way too early, obviously. So if you bought back in September of last year, congratulations. Currently Ethereum, again, doing the same thing as Bitcoin basically. If we look on 4-hour charts, we can see more clear picture. So originally there's the breakdown. If I was to trade it in 4-hour charts, so I would just short it right there and would have been successful next 4-hour period right there. But also I would have been shorting right there as well on the 20th of May, and I would have been successful again. So currently we're looking at downtrends in most cryptos, at least on 4-hour charts, but most likely soon we will get there on daily charts as well. And let me briefly look at two more coins, because for some reason people like to trade them. Here's Litecoin, LTC USD. As we are speaking right this instant, it seems to be breaking down below the support resistance red line where I'm hovering. So this is a signal to sell it short, basically, for Litecoin. And here's Dogecoin, or Doge, whatever. It's the same thing. You see, the prices are this. What I'm saying is you can trade using my indicators any security. So for example, if you were buying it, like let's say back in February of last year, it would have been, how much is this? February of this year, I'm sorry. That's 800% gain, you see. Or even more, actually. It's ridiculous. It's like 1,400% gain. It's if you were able to exit at the top. Were you able to exit at the top? That's a difficult thing to do. So right this instant, I would not be touching Dogecoin until or if it closes above 0.46, the blue line, 0.46339. If it breaks below 0.2790, where I'm hovering, that's a bear market for Dogecoin. On a 4-hour chart, it looks even scarier. See, it's coming up towards the breakdown currently on the 4-hour chart. So if it closes below 0.31, then I would short it, if you're able to, obviously. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com. Click on products, select one of the bundles I have, trading indicators and newsletter, or the ultimate bundle. Obviously, ultimate bundle is the best because you get the stack screener, Also, there is an upgrade available for advanced stock screener, so you can screen all kinds of interesting lists. You get, with the indicators and newsletter, you get the actual indicators, these lines, the green, blue, red, and yellow line. You can have them on your chart. I will explain. It's super easy. You get videos, explanations. You can get my answers to the questions if you have any, quickly by mail. Free trial, 7 days. You can't really lose. Okay, so then we have two newsletters. We have Elite newsletter, which gives you daily alerts about various ETFs, large cap stocks, gold, Forex, and cryptos and commodities. Kind of like a fixed list, about 100 securities. And then we have a stock speculator newsletter where we have new stocks constantly come up, and we look for breakouts there. So it's a very nice money maker. Basically, you make tons of money there. And again, you can get a stock screener as well, so you can find all kinds of cool stocks. Like, you get hundreds of alerts if you wanted to per day. Right, that's it for this week's recap. Let me know if you have any questions. Thanks for watching. Have another great trading week. Bye bye.